Ladies and gentlemen, the Vice President and I are very pleased to welcome you to our press conference. We'll now report on the outcome of today's meeting of the Governing Council. Based on our regular economic and monetary analysis, we decided to keep the key ECB interest rates unchanged. The available information remains consistent with our assessment of a continued moderate and uneven recovery of the euro area economy with low rates of inflation and subdued monetary and credit dynamics. At the same time, inflation expectations for the euro area over the medium to long term continue to be firmly anchored in line with our aim of maintaining inflation rates below but close to 2%. The monetary policy measures decided in early June have led to an easing of the monetary policy stance. This is in line with our forward guidance and adequately reflects the outlook for the euro area economy, as well as the differences in terms of the monetary policy cycle between major advanced economies. The targeted long-term refinancing operations, TLTROs, that are to take place over the coming months will enhance our accommodative monetary policy stance. These operations will provide long-term funding at attractive terms and conditions over a period of up to 4 years for all banks that meet certain benchmarks applicable to their lending to the real economy. This should help to ease funding conditions further and stimulate credit provision to the real economy. As our measures work their way through to the economy, they will contribute to a return of inflation rates to levels closer to 2%. As stated previously, and as a follow-up to our decision in early June, we have intensified preparatory work related to outright purchases in the asset-backed securities market to enhance the functioning of the monetary policy transmission mechanism. Looking ahead, we will maintain a high degree of monetary accommodation. Concerning our forward guidance, the key ECB interest rates will remain at present levels for an extended period of time in view of the current outlook for inflation. Moreover, the Governing Council is unanimous in its commitment to also using unconventional instruments within its mandate, should it become necessary to further address risks of too prolonged a period of low inflation. We are strongly determined to safeguard the firm anchoring of inflation expectations over the medium to long term. Let me now explain our assessment in greater detail, starting with the economic analysis. In the first quarter of this year, euro area real GDP rose by 0.2% quarter on quarter. With regard to the second quarter, monthly indicators have been somewhat volatile, partly reflecting technical factors. Overall, recent information, including survey data available for July, remains consistent with our expectation of a continued moderate and uneven recovery of the euro area economy. Looking ahead, domestic demand should be supported by a number of factors, including the accommodative monetary policy stance and the ongoing improvements in financial conditions. In addition, the progress made in fiscal consolidation and structural reforms, as well as gains in real disposable income, should make a positive contribution to economic growth. Furthermore, demand for exports should benefit from the ongoing global recovery. However, although labor markets have shown some further signs of improvement, unemployment remains high in the euro area, and overall, unutilized capacity continues to be sizable. Moreover, the annual rate of change of MFI loans to the private sector remained negative in June, and the necessary balance sheet adjustments in the public and the private sector are likely to continue to dampen the pace of the economic recovery. The risks surrounding the economic outlook for the euro area remain on the downside. In particular, heightened geopolitical risks, as well as developments in emerging market economies and global financial markets, may have the potential to affect economic conditions negatively, including through effects on energy prices and global demand for euro area products. A further downside risk relates to the insufficient structural reforms in euro area countries, as well as weaker than expected domestic demand. According to Eurostat's flash estimate, euro area annual HICP inflation was 0.4% in July 2014 after 0.5% in June. This reflects primarily lower energy price inflation, while the other main components of the HICP remained broadly unchanged. On the basis of current information, annual HICP inflation is expected to remain at low levels over the coming months before increasing gradually during 2015 and 16. Meanwhile, inflation expectations for the euro area over the medium to long term continue to be firmly anchored, in line with our aim of maintaining inflation rates below but close to 2%. The Governing Council sees both upside and downside risks to the outlook for price developments as limited and broadly balanced over the medium term. In this context, we will closely monitor the possible repercussions of heightened geopolitical risks and exchange rate developments. Turning to the monetary analysis, data for June 2014 continue to point to subdued underlying growth in broad money, M3, with annual growth standing at 1.5% in June compared with 1% in May. The growth of the narrow monetary aggregate M1 stood at 5.3% in June compared with 5% in May. The increase in the MFI net external asset position, reflecting in part the continued interest of international investors in euro area assets, remained an important factor supporting annual M3 growth. The annual rate of change of loans to non-financial corporations remained negative at -2.3% in June, compared with -2.5% in May and -3.2% in February. Lending to non-financial corporations continues to be weak, reflecting the lagged relationship with the business cycle, credit risk, credit supply factors, and the ongoing adjustment of financial and non-financial sector balance sheets. At the same time, in terms of monthly flows, loans to non-financial corporations have shown some signs of stabilization over recent months, after recording sizable negative monthly flows earlier in the year. This is consistent with the results of the bank lending survey for the second quarter of 2014, in which banks reported that credit standards for loans to enterprises had eased in net terms. However, they remain rather tight overall when seen from a historical perspective. In addition, banks reported an improvement in net loan demand by non-financial corporations and households. The annual growth rate of loans to households was 0.5% in June, broadly unchanged since the beginning of 2013. Against the background of weak credit growth, the ECB's ongoing comprehensive assessment of banks' balance sheets is of key importance. Banks should take full advantage of this exercise to improve their capital position, thereby supporting the scope for credit expansion during the next stages of the recovery. To sum up, the economic analysis indicates that the current low level of inflation should be followed by a gradual upward movement in HICP inflation rates towards levels closer to 2%. A cross-check with the signals from the monetary analysis confirms this picture. As regards fiscal policies, comprehensive fiscal consolidation in recent years has contributed to reduce budgetary imbalances. Important structural reforms have increased competitiveness and the adjustment capacity of countries' labor and product markets. Now, these efforts should gain momentum to enhance the euro area's growth potential. Structural reforms should focus on fostering private investment and job creation. To restore sound public finances, euro area countries should proceed in line with the Stability and Growth Pact and should not unravel the progress made with fiscal consolidation. Fiscal consolidation should be designed in a growth-friendly way. A full and consistent implementation of the euro area's existing fiscal and macroeconomic surveillance framework is key to bringing down high public debt ratios, to raising potential growth, and to increasing the euro area's resilience to shocks. We are now at your disposal for questions.
I do have, Annette Weisbach, CNBC. I do have two questions, actually, starting off with perhaps a stupid one for you, but you are saying that the TLTRO would enhance your monetary policy stance. What do you exactly mean by that? And also the second one is whether the downside risk to your economic scenario have intensified looking at the situation in Russia and the Ukraine. Thank you very much.
Thank you. Indeed, the TLTRO will enhance our monetary policy stance in a sense because they implement a significant expansion in credit. They're not really like the LTROs, emergency funding, but these are funding, these TLTROs are funding that are to be used to lend to the real economy, to the non-financial companies and especially to the SMEs. We do expect a sizable pickup. During last press conference, I think I mentioned an upper ceiling. Now, market estimates and indications by individual banks would seem to say that overall, so not only in the first two tranches, but also in the periodic operations, a pickup between 450 and 850 billion should materialize. On the other hand, I mean, it's quite understandable because these are funds at pretty long-term maturity with very, very attractive financial conditions. Also, let me add that the indications coming from the bank lending survey that, as I just said, show actually I think it's for the first time, a pickup in demand for loans and a gradual lessening of tightness on the supply side would seem to indicate that these TLTROs will actually happen at the right time when there is demand for them. So in this sense, they are not only enhancing our monetary policy stance, but they actually would give confirmation to our forward guidance. The second question related to geopolitical risks. Well, there is no doubt that if you look at the world today and you see the geopolitical risks have increased all over the world. We have the Russian-Ukrainian crisis, Iraq, Gaza, Syria, Libya. So geopolitical risks are heightened, are higher than they were a few months ago. And some of them, like the situation in Ukraine and Russia, will have a greater impact on the euro area than they certainly have on other parts of the world. Now, it's hard to assess this impact at the beginning of these crises. If one looks at the figures for trade or financial flows, they would, by and large, reveal a picture of very limited interconnections. Even as we go and look at the main financial institutions, one would count the financial institutions that are especially exposed to Russia on a less than a handful of names. However, it's very hard to assess what the actual impact is going to be once sanctions on one side and counter-sanctions on the other side are going to be undertaken. And it's of, I believe today or yesterday, the news that the Russian government has taken counter-sanctions in terms of prohibition to import certain products, prohibition to fly over certain parts of Russia, and so on. So we should, our risks to the recovery were on the downside to begin with, and certainly one of these risks would be the geopolitical developments. Thank you.
Alessandro Speziale.
Alessandro Speciale, Bloomberg News. Thank you, Mr. President. Going back to the heightened geopolitical risk that you haven't mentioned so far, in case one of those risks were to materialize and deliver a substantial shock to the euro area economy and change in the outlook for inflation, how would you be ready to react? I'm thinking, of course, broad-based asset purchases, but also what do you have in mind in this case? And talking about the ABS purchase plan, you have often said that this is not something that the ECB can do alone. There are many actors, many institutions in Brussels, in Basel, who are looking after that. But what can the ECB do on its own if it needs to act on a relatively short time frame? Thank you.
Thank you. On the first question, I would say we're just at the beginning. It's very, we're still assessing what the possible likely impact of sanctions might have on the euro area economy. We see risk especially coming from, I would say, the price of energy. But as I said, it's kind of difficult now to precisely define what are the options in the future, especially if the conflict were to escalate. Our monetary policy stance remains and will remain accommodative, and I can only reaffirm that the Governing Council is unanimous in its commitment to also use unconventional measures like ABS purchases, like QE, if our medium-term outlook for inflation were to change. On the ABS, you're right. I said that the ABS final action will depend on the action of many other actors. But the ECB has decided, first of all, we have intensified preparations on the ABS. The various committees of the ECB have worked and are working on that. And during last press conference, I kind of listed all the areas that need work. I would only add that we are proceeding with our work regardless of what the timing is for possible regulatory changes in this area. And the other news is that we've hired, we are about to hire. Actually, I can't disclose any names because the thing isn't finished yet, but we are about to hire a consultant that will help us to design this program in the best possible fashion.
Brian Blackstone.
Brian Blackstone with the Wall Street Journal. Is when you talk about being unanimous to do more if the medium-term outlook is too low for inflation, we've now got inflation at 0.4%. Can you just explain why that isn't already too low, why that isn't already something that should be triggering a response from the ECB? And just to get back on the ABS question, you've talked about, you gave some more details about the preparatory work. Can you give us a sense, will this actually lead to ABS purchases? Or is this something that you will be talking about, consulting about, and may not actually lead to the ECB buying any of these things? Or are you confident that this will actually result in an ABS purchase program? And do you have any better sense when that might be? Thank you.
Yeah, I mean, the second question is, in a sense, either strange or easy to answer. I mean, if we were to work on things that don't happen, we wouldn't spend well our time. So the work we are doing is with the expectation that we will take action in this field. Let me add that the final decision hasn't been taken yet. So the final decision is to stand ready with a program that would help to strengthen our accommodative monetary policy stance, injecting money into the real economy. And in so doing, it would lead to a reconstruction of a market that has disappeared with the crisis, also for good reasons. And that's why we are focusing our efforts on a market which would trade products that are, as I said on other occasions, simple, transparent, and readable, basically, and real. I said simple, transparent, and real. Simple means readable. Transparent means that you can actually go through and price them well. And real means that they are not going to be a sausage full of derivatives. That's what, in a somewhat more popular language, that's. On the other thing, isn't 0.4% low enough? Well, it didn't really come as a surprise, because as I told you a moment ago, this data is mostly due to the changes in the price of energy. And if we consider the HICP excluding food and energy, we would have a 0.8% unchanged from the previous month. So but having said that, there is no doubt that inflation is low and will remain low. Inflation expectations, however, over the medium to long term remain firmly anchored. In the short term, we observe a decline in inflation expectations because as it's quite natural, they are heavily determined on the basis of current inflation. On a specific point that was raised by a usually accurate market observer, that also if we look at a 5-year inflation expectations derived from the break-even of the linkers, we would observe a 0.5% inflation expectation. This was quite an interesting point, but I mean, at least we think the calculations should be done differently. We should observe not one issue, but the universe of issuances of linkers with that maturity, and this would show that the expectations over the 5-year horizon are still anchored at 1%. So we haven't observed any decline on the medium to long-term expectations. Long-term expectations remain anchored at 2%. Other expectations remain anchored at the previous levels. Short-term expectations, indeed, have declined.
Johanna Trick.
Johanna Trick, Market News. I've got 2 questions for you as well. You ascribed some of the weaknesses in the second quarter to technical factors. And more generally, you largely left the economic assessment unchanged compared to the previous months, apart from adding the word uneven. So does that mean you don't see any slowing of the underlying momentum? Or could you just give us a bit more detailed assessment of how you view developments there? My second question is on inflation. The ECB staff forecasts have been persistently too optimistic on the inflation outlook. What considerations have you given to reassessing how these forecasts are being made to get them more accurate in future, and perhaps related to that, how big are the risks that we'll see another downgrade of ECB staff inflation forecasts in September? Thank you very much.
Thank you. On the first point, let me say that the assessment of the present situation is especially volatile because over the last 2-3 months, we've had some positive signs. First of all, we had a disconnect, which actually has been going on for more than 2 or 3 months, between soft data and hard data. Being the soft data better than the hard data on average. Second, we had, even amongst the soft data, we had some positives and some negatives. We had signs positives from a PMI, the retail sales, the unused capacity, which is slightly less than it was, the labor market showing some improvement, and this is not soft, but it's actually hard data. And at the same time, we had not good figures for GDP, and also on the soft side for IFO and other indicators. Second, you're right in saying that the weak GDP figure depends also on technical factors like the lower number of working days in the period that's been observed. But having said that, I will simply, I think, repeat a sentence that you heard many, many times. The recovery remains weak, fragile, and uneven. And if one wants really to kind of try to detect a sign in the data that have shown up in the last, say, 2-3 months, one would say that there has been a slowing down in the growth momentum. And this is for the weak part. For the fragile, for the recovery being fragile, we just discussed the potential sources of fragility. But the unevenness part is actually become more interesting as we proceed along this modest recovery. It's pretty clear that the countries that have undertaken a convincing program of structural reforms are performing better, much better than the countries that have not done so, or have done so to a limited extent. I think this is coming out quite clearly on the scene in front of the eyes. That's I think the broad assessment I would give for growth. On inflation, we've just discussed it before. On money and credit, I think there we see that the money and credit dynamics remains weak, but there are better signs, or say signs that are less bad than we were used to observe in the past. And they come essentially from two sources: from the figures of money and loans to non-financial corporations. As I've mentioned before, you see that the deterioration in lending is gradually smaller and smaller. And they also come from the bank lending survey, where the standards of tightness are decreasing, even though they remain tight from an historical perspective. And interesting thing is that for the first time we are observing a pickup in demand for loans. Also, when, again, we examine the reasons for the tight supply, we see, and I think this has been going on now for 3 or 4 months, we see that risk perception or risk aversion has lost importance as a factor reducing supply or increasing tightness. On the second question, we certainly keep in mind your suggestion, and our staff is continuously improving, and we are really worried, and we want to take action on this, and we're very well aware. But one has to understand one thing, that the ECB was not alone in overestimating inflation. And to some extent, much, as I've said many times, much of the fact that inflation being lower than estimated and expected was due first to energy prices and food prices until the third quarter of 2012, and second to the exchange rate developments thereafter.
Klaus Ranajakis.
Klaus Ranajakis, ARD German Television. Yeah. Klaus Ranajakis, ARD German Television. Mr. Draghi, please allow me to ask you two questions on a more general level. During the Euro crisis, the ECB has increased its non-standard measures. It has acquired quite a lot of new functions and has increased its influence, if not to say perhaps its power. How would you describe the change of character of the ECB? Or in other words, how would you say the ECB, where is the ECB standing now compared to its regions? And secondly, regarding your remarks in London a few days ago concerning your suggestions that politicians should move towards more fiscal integration, what would you say, how important is this not only in order to solve the crisis, but also to make the ECB a more traditional, a more normal central bank again? Thank you very much.
Thank you. Thank you. When the crisis erupted, the ECB was still a young institution. I would say that the ECB has grown a lot during the crisis. The crisis was and still is an extraordinary time that required from the ECB the use of extraordinary instruments. That was our first, I would say, our first responsibility. But this responsibility was actually implemented always in a way to retain our mandate. So we used extraordinary instruments to respond to extraordinary needs, always within our mandate. And our mandate was maintaining a price stability. In this sense, the ECB hasn't really changed with respect to its fundamental characters. It has grown in having more instruments, in becoming more adequate to respond to the varying needs of a difficult economic situation, but it hasn't changed in its fundamental pillars, which are the ones that justify its existence. The second point, I'm not sure I actually spoke of greater fiscal integration. The point that I've been making by now several times is the following. This union, this monetary union, is an unfinished union. We've made an enormous progress on the monetary side with the creation of the ECB and the euro. We made significant progress in sharing budgetary sovereignty, in sharing common rules, in accepting having common rules in the budgetary area. We made great progress in creating a banking union. Now, we'll probably make further progress in creating what the new president of the Commission, Jean-Claude Juncker, called the Capital Markets Union, and I see this as a likely likely possibility in the future. But there is one further area which has acquired, if anything, even greater importance during the crisis, which is the area of structural reforms. And that's where I I said several times that it's probably high time now to start sharing sovereignty in that area as well, taking the structural reforms area in the marketplace, product reforms, single market legislation implementation, and labor market reforms under common union discipline. In other words, trying to replicate our success in the budgetary area also in the structural reforms. Thank you.
Claire Jones, FT.
We had some really bad news on Italian GDP yesterday, which has led to questions over whether Renzi is going to be able to fulfill his reform agenda. And more broadly than that, I guess we're seeing very weak growth even in countries that have implemented structural reform. We're not seeing growth at a rate that's really going to cut into very, very high unemployment. As you've just said, you've mentioned a lot of times that we should see more integration, more centralization on structural reform. But given that we haven't got that yet, how politically feasible is it that we're going to see these structural reforms when the short-term gains just are going to be pretty non-existent and unemployment's going to remain, it seems, very high if growth remains this weak? And then for my second question, you know, a lot of economists view QE by the Bank of England and by the Fed as a form of insurance policy against a big macroeconomic shock. Now, you've noticed in your comments so far today that we've seen a rise in the threat of such a shock. With inflation at 0.4%, aren't we in a position where the ECB is adopting a very, very risky strategy where there's very little buffer against, you know, an outright episode of deflation if there is a big, you know, macroeconomic shock?
Yeah, on your first question, one of the components of the low GDP figure for Italy is the significantly low level of private investment. While one would observe a rebound in private consumption, as far as private investment is concerned, one observes a very low figure, especially low figure of private investment. Now, this isn't unique in the euro area. The levels of private investment for the euro area as a whole is low, and certainly much lower than it is in other parts of the world, like in the United States. Then we ask ourselves why this is so. Now, certainly it's not the cost of capital, because interest rates, nominally and real interest rates, have been low, and in some parts of the euro area are negative and have been negative for quite a long time. So the answers are, one has to do with expected demand, but the second answer has to do with reforms, uncertainty. The general uncertainty that the lack of structural reforms produces is a very powerful factor that discourages investments. There are stories of investors who would like to build plants and equipment and create jobs, but it takes them months to get an authorization to do so. There are stories of young people who try to open their business, and it takes 8-9 months before they can do so. That has nothing to do with monetary policy. So it's mostly the lack of structural reforms. I keep on saying the same thing, really. reforms in the labor market, in the product markets, in the competition, in the judiciary, and so on and so forth. These would be the reforms which actually have, and have shown to have, a short-term benefit. You don't have to wait a long time, because, you know, one of the common counter-arguments to this is structural reforms take time to actually do them, and also take time to produce a result. Well, as some of our countries show, this isn't true. In these countries, unemployment is going down and output is going up. So some of these reforms have an immediate benefits. Others clearly do need much longer time. I'm sorry, your other question was?
It's just the idea that a lot of economists have that QE was undertaken as an insurance policy against a big shock, and now there's there's very little wriggle room if there is such a shock for the ECB with inflation at 0.4%.
Well, let me say that the monetary policy announcements of last June have been successful. They have been successful, not only the various monetary policy announcements, but especially so the negative deposit rate, the negative rate on our deposit facility was considered to be one of the reasons for this success. We basically decoupled our monetary conditions from those of the United States. And if you compare conditions with the beginning of May, when I first announced likely action on this front, you see that the forward rate, the 1 to 4 years OIS forward rate declined by 43 basis points. The Euribor, the 3 months Euribor, by 13 basis points. Excess liquidity is now at 140 billion, and it's been stable over 100 billion. There has been a general compression in liquidity premia. But also, there is another consideration to make, and that is that the fundamentals for a weaker exchange rate are today much better than they were 2 or 3 months ago. And this depends on factors that were, in a sense, in the baseline, like a slowing net trade surplus, and but also depends on factors like there has been a decline in short-term capital inflows. There has been a quite significant increase in the short-term positions on the euro, as recorded by the CFTC. In other words, markets have perceived that the euro, that monetary policies in the euro and in the United States are going to stay on a diverging path for a long period of time. Other central banks have been reducing their exposure to the euro. And if you look at how markets are expecting real rates to be for the foreseeable future, meaning until 2019, current expectations are that real rates will remain negative in the euro area for a much longer time than they will be in the United States. I think that is one of the major developments that I would see that would pick up from what happened in the last 3-4 months. Thank you.
So, Ide.
Thank you. Soheide from Kyodo News, Japan. My question is about the ABS purchases on the terminology side. You said you have intensified the preparatory work with the expectation to go ahead with it. Assuming it does go ahead, would you have any objections towards calling it a QE? Would you call it a QE ECB version, or is it going to be something fundamentally different from other central banks?
Well, no, I mean, if we intend QE it depends very much on what we define by QE. If we define QE as a broad-based asset purchases, then QE would include ABS, but would certainly not be reduced to ABS only. The QE broad asset purchases programs include government bonds, public, in general, public assets and private assets. So ABS would be an example of private assets, but then you have QE into government bonds that is still on the table. Thank you.
Paolo Dentigno.
Paulo Dentinho, Televisão Portuguesa, RTP. Sir, how was it possible that with Troika in Portugal for the past 3 years, no one noticed that Espírito Santo was a problem? And doesn't this affect the other investors for the future situations? And this doesn't not create doubts about the efficiency of the monitoring?
Yeah. Well, I can't comment directly on individual banks, but what I can say about what the Portuguese authorities have done in this case, they certainly took swift action on that case. Both them and the European competition arm worked very well together and basically addressed a situation which could be potentially complex. The market reaction, both in Portugal and out of Portugal, basically confirmed this view that authorities had been swift and effective, and what would have been a systemic incident is actually now considered an incident, an episode which is restricted to this bank and to the owners of this bank. I'm using incident as a euphemism, but you understand that, what I mean. So it's just generally perceived as an episode that is being kept contained as far as this bank is concerned, and has not affected neither the banking sector in Portugal, nor Portugal at large, nor other markets outside Portugal. This is what I think your question. Thank you.
Alessandro Merli.
Alessandro Merli, Il Sole 24 Ore. A quick follow-up on the previous question on the Banco Spirito Santo. It had an impact on the accounts, for instance, of Crédit Agricole in France. I was wondering if in the comprehensive assessment that you're conducting of banks, this question of cross-holdings of banks is being taken into account, not only in terms of shareholdings, but also in terms of bond holdings of banks for bonds of other banks. And my other question goes back to the not only the recession in Italy, but also the slowing of other countries such as Germany and France. So would you characterize from what you said previously, these countries are countries that have not done enough reforms? And would the public investment take the place of the lacking private investment to compensate for this insufficient growth?
I would ask the Vice President to respond to the first question.
Mm-hmm. Well, thank you. Well, the asset quality review includes all portfolios, and that includes also, of course, the exposures and securities that one bank may have on other banks. And those assets are then subject to the exam to see if they are properly valued in the balance sheet of the banks. So the aspect that you mentioned is certainly included in the AQR.
Now, we have to distinguish between countries that have done reforms and countries that have done nothing or have done very little reforms. You mentioned Germany. In the case of Germany, the slowdown, first of all, we have to assess the full impact of these, what I call technical factors. And we will be able to do so in the coming days, namely less working days for this. But it's quite clear that if the geopolitical risks materialize, it's quite clear that the next 2 quarters will show lower growth. A completely different story is for countries that haven't done reforms or have done very little of them, where you've been observing this weakness now for quarter after quarter. And that's where you mentioned public investment. That's what I meant by growth-friendly fiscal consolidation. These countries have to do a growth-friendly fiscal consolidation, meaning less taxes. We are talking about a part of the world where taxation is the highest. And these countries have the highest taxation in the highest taxation part of the world. So lower taxes, lower current expenditure, and possibly higher government investment expenditure, public investment expenditure. But all this is possible only if the better conditions are complemented by structural reforms. You can, very much, I think I made this example last time when I said TLTROs offers very good financing conditions to banks. But if one can't open a new business shop, there's no point in giving him more credit. He wouldn't know what to do with this. Same thing with taxation. You lower taxes. Certainly people would welcome this very much. But if they cannot actually translate these lower taxes into better business, it's pointless to do so.
Jean-Philippe Lacour.
Les Echos, maybe following up your statement before and on inflation again. Does the ECB expect that in the short to medium term there will be inflation rates going more apart within European countries? Take Germany. Inflation should rise maybe above the target of 2%, and this is supported by higher wages. You hear the debate in the last days, while other countries in the south of the periphery live in times of very low inflation, so good deflation maybe, tied with the ongoing reforms. So this going apart is complicated maybe for you to interpret, but are you yes, is this expectation of the ECB as well? And secondly, maybe on France, because this country I guess you have in mind when you tell some countries we should have a higher momentum of reforms. France is again and again claiming that ECB should do more for the recovery and to combat inflation, low inflation. But could you say to Paris maybe one more times that they should focus on these reforms and not fear maybe that these reforms could be tied with low inflation or maybe deflation, like in the south of the Eurozone? And finally, maybe a very personal question, but do you intend to spend some holiday in Italy to sustain the recovery of your home country? Thank you.
Thank you. On the first part, I think your question reveals the complexity of this of the issue. We have countries where inflation will have to go above 2%, and certainly the aim of the ECB is the objective of the ECB. And the way price stability has been interpreted by the Governing Council of the ECB all throughout its existence, almost all throughout its existence, is that inflation should go at below but close to 2%, and we are far from that objective. So any development that would bring this inflation rate towards the 2% is welcome. But it's not the ECB business to determine wages for the world, for the euro area, or for single countries. The wage determination is in the hands of social partners. For the other countries, the countries that now are having deflation, the key question is no doubt that this sort of negative growth in prices depends on lack of demand, but also on relative price adjustment. And then the key question is this going to be a short-term affair? In which case, it would not be a source of deflation, or is it going to last a long time? And it can last a long time for at least two reasons. One is that there are self-fulfilling expectations of continuously falling prices, which lead people to postpone their expenditure plans and therefore cause further falling prices. We are not seeing this sort of phenomenon at the present time. But there is another reason. What we define by relative price adjustment often is not a relative price adjustment within certain sectors where simply people just change prices in their catalogs. Often it reflects a different reality where entire sectors are going to be annihilated, are going to be destroyed, and new productions have to take place. New sectors have to start their activity. And this is a much longer process that doesn't have to do necessarily much with expectations and self-fulfilling expectations, but it may take a long time because it takes changes, it takes movements of factors, people, from one sector to another. And we may well observe this phenomenon in the so-called deflation countries. On the other point you made about what the ECB is doing, well, I listed before why the fundamentals for a weaker exchange rate are now better than they were a few months ago. I think this is quite relevant. And I listed a series of factors that I think I should not repeat now. But the main factor is that basically monetary policies in Euro and in the United States and in UK are going to stay divergent, are on diverging path and are going to stay on a diverging path for a long time, and a much longer time in Europe than elsewhere. So I think that's the point. But again, let's not forget the creation of better financial or tax conditions are a necessary but not a sufficient condition for restoring growth. Yes, I will go to Italy. And I will not participate to the recovery of my country.
Two more questions, Mark Schroers, and then the last question to Eva Taylor.
Yes, thank you. It's a long time now, but I just want to follow up on the question on ABS purchases and the first answer you gave on this topic, because it seems to suggest that such purchases are already a done deal and that it's not a question of if, but only a question of when and how. Is that correct? And the second question is on inflation expectations. I guess next week we will get the new survey of professional forecasters. Did you already get the results of some first results today, and how do they look like, especially regarding longer-term inflation expectations? Thanks.
Well, on the second question, I can't really say anything about, but as far as I know, they are confirming our medium to long-term outlook. As I said before, short-term inflation expectations have been declining, but not in the medium to long term. On the other point about ABS, Well, in a sense, you know, ABS is just a name. And we know that the traditional ABS that were being traded before the crisis had many, to be charitable, many imperfections. And we certainly would not and could not recreate that sort of market because it was considered, some of these imperfections were actually considered one of the major roots or the major causes of the financial crisis. So our effort isn't simple because we want to recreate a market that is limited to a product that is, as I said before, simple, transparent, and real. Second, this market can actually, we do, I mean, Bank of England and ourselves believe that this market can restart, but the economics of this market must work. And what is now one of the major impediments to this is the present regulation. Having said that, no matter what regulators will be doing, we want to be ready, and that's why we've intensified preparation.
Last question. I know, sorry. I have an hour, and I'm really trying to weigh it up. Could I please have the last question from Eva Taylor, please?
Eva Taylor with Reuters. Hello, Mr. Draghi. My first question, I'd like to go back to Banco Espirito Santo. And you said that the problem is contained for now, but how confident are you that this will not spread actually to the rest of the region and reignite the crisis? And to what extent are the problems at BES actually symptomatic of unresolved problems in the Eurozone periphery? My second question, I'd like to ask you a little bit more about the Russian sanctions, and in particular those affecting the 5 major Russian state-owned banks. How are you going to make sure that the funds that these banks, Eurozone subsidiaries, are taking from the ECB are not going to leave the Eurozone? Thank you.
Thank you. You know, on the first question, I think I've answered. The action undertaken by the authorities, Portuguese authorities, by the ECB and by the DG Competition was, I think, swift and effective. The creation of the bad bank and a good bank. And basically, it proved to be quite effective in reassuring markets and reassuring also other players of the same sector, namely other banks in Portugal and more generally banks everywhere. Now, of course, this is the initial decisions. There's still a lot of work to do about that in terms especially of transferring the assets between the two entities and the prices at which they'll be transferred, the treatment of the exposure in Angola. So, but basically the entity that was created is an entity that has acknowledged the losses, the impairments, and it's been now in the hands of the Resolution Fund. On this point, let me just make a point which was a source of some confusion. The Resolution Fund owns this bank and probably and hopefully soon will sell it back. In this sense, there was no public money directly or eventually involved into this. The differences in prices that could arise from the transfers would have to be filled by the banking sector, not by the government. I think this is something that ought to be clarified, so that's one point. So far, we frankly didn't have any sign that this is so. Now, please.
No, Russia.
Yeah.
Second question.
Yeah. One more word about this. We've seen, this is a major episode, but we've seen other minor episodes of dramatic changes in the corporate structure of banks since our AQR effort was launched. We've seen many banks raising significant amounts of capital in the last year. And I think that is an important, very important element that should not be underestimated because it's so crucial to repairing the bank lending channel in the euro area. Now, on Russia, you were asking about the Russian subsidiaries in the euro area. They will, now these banks will be basically moving within the EU regulations, but we will do something slightly more than that, in the sense that these banks will have access to refinancing, but they will be asked to announce their requirements first. And second, approval will be granted if it is being confirmed that the requested liquidity will not be used to circumvent EU restrictive measures. And so banks will have to explain why they need the money, and the national central bank's inspectors, supervisors, will assess their statements. Thank you.